Welcome to the AJ Brown Show, where we talk about all things investing, options trading, and the like. Now, here's your host, AJ, whose primary mission in life is to help you become a better investor.
All right, ladies and gentlemen, welcome back to another episode of the AJ Brown Show. Today is February 13th. This is episode 223. My name is Cyprian Francis, and with me, as always, the main man of the hour, AJ Brown. How we feeling today, AJ?
Are you superstitious? It's Friday the 13th.
As I was going through my what are we going to talk to, I tried to find out the rationale behind it other than the movie, but yeah, I did see that. Are you super? I'm not. Are you?
No, but my wife is. So she started to do weird things today. I'm like, why are you being weird? She's like, it's Friday the 13th. I was like, oh no, Jason's gonna get us.
I'm more worried about pulling off February the 14th, which is tomorrow.
Mm,
So that's
mm,
that's where my
mm,
head is at.
mm-hmm.
Uh, I feel like the week has been exciting. We've got a slew of economic news. It feels like for the first time in a while, it's like believable economic news. Like it's
Mm.
been aggregated. Where do you want to begin? What are your thoughts?
Yeah, we could take a look at some of the different news reports. We finally got employment numbers on Wednesday. This was the employment numbers for January. I don't know if our viewers remember, but we had a mini shutdown there. And that, of course, delayed these numbers from the first Friday of the month to just this past Wednesday. And they came in stronger than expected, which kind of thwarted a bunch of investors because remember, the investors, like to watch what the Fed does, especially with raising overnight interest rates. And the Fed is playing this balancing game between employment and inflation. And if employment is doing poorly, they'll want to lower rates. If inflation is doing poorly, which means inflation's getting higher and higher and out of control, they'll want to raise rates. So, actually investors were hoping that the employment numbers would be a little bit sucky because investors would like to have the overnight rate lowered sooner than later. But with these strong employment numbers on Wednesday, that was one of the reasons why we started to see some selling in the earlier to mid to even yesterday part of the week was because these employment numbers came strong and it almost look, in the middle of March, we're supposed to have another Fed meeting, and it's almost no chance, according to what investors think right now. This is the CME Group's kind of poll as to what the Fed might do, and we could actually look at some of the Kalshi and the different predictive markets as well, but. The CME group is saying there's probably no chance there's going to be a rate drop in March, and also pretty much no chance at the end of April. The first possibility of a chance, and we're going pretty far out, things could change, is in the middle of June. So, the like I said, investors would really like to see rates go down lower than not, but still it seems like June is going to be our date. What else do we get? We got a pretty poor retail sales number. Retail sales, as you know, is what runs the economy here in the States. So when you get poor numbers there, investors don't like that. Existing home sales didn't come in very good. Today we got the consumer price index. Not bad. This is a measurement of inflation. It's not the number one measurement of inflation, but the consumer price index came in at 0.2, 2.4, which is a little bit lower than what the expectation was. However, the consumer price index without food and energy tends to be more volatile, did come in as expected. So, yeah, a lot of economic news. I don't think anything was out of the ordinary except, with the combination of retail sales and existing home sales kind of being poor, and then adding into it that employment isn't as bad as you wanted. It was this mix that overall made investors want to, sell off. And then there was also the news about AI. Whenever AI is in the news, which tends to be a market driver right now, that too also gives investors a little bit of agitation.
So is the consensus essentially that the economy, the different points of the economy are not outside of, variable ranges where, we'll get a little bit good here, we get a little bit bad here, but not enough to swing the pendulum one way or another. And so the economic moves over this quarter, maybe the next quarter and a half, you said June, may not play as much into the market, but we are being driven by, at least from what I'm seeing, is technology pullback. I saw a couple of tweets this morning about the pullbacks across the board in technology. Is that what's leading to an overall sluggishness, I guess, in the SPX kind of just wavering? I mean, it's looking like a lot of chop over the last 45 days.
Oh, absolutely. In fact, not only has there been a lot of chop, let me zoom in to the more recent price action. The highs and lows have almost been within $1 of each other. Let's put our rainbow chart up. When we put our rainbow chart up, Sip, what we can see is, each time we get a movement from reversal to reversal, it's almost at exactly the same place. You can see that these pink zones are almost lining up perfectly. We've had just about 4 pink zones right on each other. That's the definition of sideways chop, and you nailed it. It's about 45 to 60 days that we've been in that perfect sideways movement, and you can see that the trend changes have been occurring again. We literally just got this trend change that we had most recently. It just literally matured only to get changed again. So we're on our 7th trend change in the last 4 months. Yeah. And the movements between reversal. I mean, this one only lasted 3 days. We keep talking about every week how the movements, they used to be like 2 to 3 weeks, even a month long, each movement from bottom to top. And now we're down to 3-day movements from top to bottom. So definition of sideways choppy.
So we're not necessarily, because of the pullbacks, some of these headlines look a little bit more dramatic than they are. I mean, I saw one today with 40% pullback in Microsoft, which is like, oh my God.
Well,
But like when you've
yeah.
run up X amount, you're bound. And so I mean, is that the switch from tech to value plays? Because I know you mentioned that last week. Are you
Yeah.
seeing more follow through with that this
Oh,
week?
absolutely. Absolutely. Anything that is a value play. So, oftentimes techs, people invest on them based on, what they may produce in the future, right? So it's kind of like an anticipation. It's kind of like investing in it in a kernel of popcorn, with the expectation that it'll pop in the future. The sooner the better, right? That's the idea behind investing in a lot of the techs. Whereas a value play, you've got a company that is proven itself. It's making profit. It's making enough profit to run its daily expenses. It's not about something in the future. It's about something that's working right now. And we've seen this huge sector rotation, billions and billions, if not trillion dollars coming out of that tech, that investment philosophy of let's put our money in here and hope the popcorn kernel bursts in the future, to, hey, let's go ahead and fund companies that we know we can get cash flow from right now. Cash flow is king. So yeah, that sector rotation is real. We're seeing it, for 2024, 2025, we talked about like 5 to 10 stocks in the tech world that were driving the whole market. Now we're seeing those tech stocks kind of deflating, and it's on, the topics keep changing, but there's the one topic of, has AI become overextended? Is it not a matter of, if the AI bubble will bust, but more like when and how quick? Will it be a fast bust where the bear jumps out the window, or will it be a little like a pop and then a slow decay out of AI? There's that, because all the stocks got overextended the way that, internet stocks in the dot-com boom almost 25 years ago did. And then the other one is about the displacement. And, the other topic, the other phrase I've been hearing a lot is legacy modernization. Will AI do more than just amplify what people can do? Will it actually replace jobs in different organizations? So legacy modernization and displacement by AI has also been on the topics this week for why the market's kind of undulating. But it's literally undulating between 6,800 and about, I would say 7,000, maybe 6,980. So we're talking about 180 to 200 points on the S&P that we're oscillating between. So it's not like the market's losing its underpinnings or the market's reaching new highs. The market's just trying to figure out what the heck is going on.
Yeah, and I have a couple tweets on what we just talked about. So this one came up. This is where I thought of Microsoft, but this was basically saying buying Microsoft here means you're paying the same valuation as 2018 bear market lows, COVID crash lows, 2022 bear market lows. And so to me, as like value investing, this sticks out to me as like, because last year we had the big tariff pullback, and in a lot of cases that was a great buying opportunity. And so this tweet here is making that case from the value play. And then I saw this one for Apple, right? So Apple essentially suffering biggest loss since April of last year as well, right? And so Apple's a weird one because they actually make a lot of money and it's a very valuable company, right? Like,
Yeah, the question on Apple is it value or is it, growth? They're a little bit of both.
I mean, how often do you use your Apple products?
I mean, I use them daily.
Every day, nonstop, right? So
Yeah.
that to me, that is a testament. And then I had one more where it had the full pullbacks, right? So this one right here. So below all-time highs right now, the S&P 2, right, which is kind of what you talked about. Apple 9, Nvidia 12, Google 12, gold 13, which we could maybe go to the metals because I know that's something we've been talking about. Trump coin down 96, Fart coin down 93, Melania coin down 99. Crypto's kind of seeing some cold markets right now. But yeah, so seeing as we're in, well, I guess you brought up gold. What are your thoughts on gold? 5,000 still a little too expensive in your mind?
No, I think that with what's going on, I think that putting your money into, I mean, I wouldn't, if you're dollar cost averaging, I can see you, adding a little bit of gold. I wouldn't be buying a whole bunch of gold right now because it is at a peak, but it's down off of 5250, and I actually think it is a great store of wealth for those folks who jumped into it. I think that with us seeing it leveling off, I think it's hit a price that explains its value. But yeah, gold's up there. I think silver also leveled off and it pulled back a big chunk from 115 down to 80. That makes more sense to me, actually. And I might be showing my age or not wanting things to change. 30 makes sense to me on silver. And Bitcoin, I wanted to ask you, because I know you've had in the past a crypto holding. Do you still have a crypto holding, and how's it holding up?
I mean, I think what you just discussed with the gold strategy of dollar cost averaging in, that's kind of what I'm doing. In my
Okay.
opinion, anything under 100,000 on Bitcoin is like, in my mind, there's no way it doesn't get back to 100,000 in this year or next year. And partially just because it's so integrated with everything now. Like back in the day, it was, but now there's so many wallets and everything, and the supply is very finite. And the transaction, like when you're talking about gold, and maybe I want to invest in some gold. I don't think that's that easy to do. Like for Bitcoin, I'm literally pulling up my Robinhood and I'm placing an order. I own the Bitcoin. It's in my wallet. I could transfer it to another wallet. That's why I think there's appeal there. Not to say that gold doesn't make sense, but how do I even other than the Costco bars that you got last year at a really good deal.
I love
I
those
still, I
bars.
still don't really know. I did find an app that does help you own gold, and it kind of treats it as like a debit card, and like it kind of goes up, and you could use it. So that was appealing to me. But I guess that was a question I would return to you. That's I'm very big on Bitcoin. I'm also a big
Yeah.
fan of Ripple. I'm hearing really good things about Ripple being XRP being like something that might get instituted into more infrastructure and things like that. But for gold, how would somebody with, I mean, that's $5,000 an ounce, but say I wanted to put 5,000 to work in gold. What would your recommendation be?
I mean, I'd have to. I'll be honest with you. Personally, besides that Costco deal, we had that guest a while back that was going to help people buy gold. I guess I would call him, but uh, it's so expensive at $5,000 an ounce that if you do look out for these little deals for us little guys, that usually can hedge your portfolio big time. I agree with you though. Any way that we can make this easier, and yeah, it's really easy to get a Bitcoin wallet now, or a not even a Bitcoin, a crypto wallet. And I agree with you that we can use all of these a little bit by little bit as a store of wealth. So as you gain wealth, put a little bit here, put a little bit there, and create a plan to buy a little bit. If you set aside, if you're living at a surplus, and you set it aside, say 10% of that surplus, split that up. Buy 2% in gold, buy 2% in silver, buy 2% in a crypto or multiple cryptos, and just keep investing that over time. This is going to be a store of wealth, not necessarily something you trade, in my opinion.
And I see 5% up today. And what's wild about watching Bitcoin is if we close up today, usually that 5% could turn into 5% on Saturday, 5% on Sunday. When most of the other markets are closed, this is a market that stays active, and 10 up, 10 down on a daily swing is not, a far stretch. And unlike the free public markets where we have those thresholds, right? Where we have those, if the market drops X amount, we got
Circuit
to turn
breakers.
circuit breakers. That doesn't exist in crypto. And so,
Mm-mm.
so, that's why I like the long term. It's like I don't really care what happens today, tomorrow, next week. I mean, it's cool when we get a rally, but is Bitcoin going to be around next year, in 2 years? I think so. Like the accessibility is just so fascinating.
Well, and what's funny is we here on the East Coast have had a cold snap, and many people know that I've been mining Bitcoin with my little. I have 4 little Bitcoin servers that have been running almost nonstop now for about 13 years, and these things I only roll them out in the wintertime because it helps heat the house, right? But it was funny because we've had this cold snap. You might have seen it on the news. I'm here in the Washington, D.C. area. So we've had all 4 going, in different parts of the house. And my wife took a look at the Bitcoin wallet, and she's like, oh, oh, this is good. We love she's like, I hate how noisy they are. I hate how dusty they are. I'm like, you're not going to. And at the end of the month, she's kind of happy. So, you just run these things. You buy a little Bitcoin, you mine a little Bitcoin, and you just do that, and then it surprises you. I've been mining it since it was, $500 a Bitcoin, and now it's, even at $70,000, it's fine.
Yeah, well, I did see a couple tweets where they were like similar to oil, how we talk about like if it goes below a certain price, it becomes inefficient. To
Yeah.
similar concept with Bitcoin, and I think that number is somewhere around 70,000, where you kind of, and I don't know the logic behind that, but over time it's going to become more difficult. Like, isn't that the whole concept of mining?
Yeah, yeah, but the scoop is if you're just mining to heat your house, like I do, then it just makes sense because either you're going to run something that just generates heat and uses electricity, or you're going to run something that generates heat, uses electricity, but also mines you Bitcoin. So if you're doing something, you figure out a strategic way to do something, it makes sense. And you're right, as the price of Bitcoin comes down, a whole bunch of people jump out because it doesn't make economic sense. But then I see my wallet when I'm actually, generating. What's really funny is I've actually been talking to some nerds in my neighborhood about, and not to get anybody, not to use that. I'm using that as a positive
I'm
term
a nerd. I
'cause
love nerds. We're fans of
yeah,
nerds.
I've been trying to get this guy who's a mechanical engineer next door to me to figure out how to turn these Bitcoin servers so that they heat the hot tub, because then I'll use it year round, right? I'll just continue to run them and heat the hot tub because we use the hot tub almost daily, me and my little one. So, yeah, if you can do something and figure out, it's like cash secured puts. Why would you just buy a stock when you can use a cash secured put and get paid for putting your limit order out there? Same thing. If you can kill two birds with one stone, go for it. Because again, buying Bitcoin, mining Bitcoin, any of these cryptos, you know, it's a store of wealth. It's not something that I personally would trade, but if I'm just accumulating it, you'd be surprised because after, since 2013, so we're talking about 13 years of doing this, this put down a nice mortgage payment on one of our properties. So, it just makes sense.
Yeah, well, I think we would both agree that we're more pro Bitcoin than we are fart coin. So
Mhm.
you really should be a little bit more cautious on the coin side.
Yeah.
Uh, Bitcoin is kind of the gold standard. All right, before we go into some more pop culture type stuff, the morning sip, I did want to
The
get your
morning
take
sip is
on.
back.
I did want to get your take on volatility.
Oh, the VIX.
Because that is a popular trade, concept that you've evolved here at Trading Trainer. And I believe we're starting to creep up with some of these tech sell-offs. So, what are your thoughts here? I'm seeing a little little blue arrow. So let's give
Well,
everyone access to your tools, but let's break it down.
and I want to emphasize for folks that, and I had to emphasize this last night on our call with our program participants. A bottom signal doesn't mean that we're at the bottom, right? And so that whole VIX trade, Ciprian, is predicated that there is kind of a bottom to the VIX that we don't go down below. So I'm going to zoom us out to about 2 years. And over the past 2 years, we really haven't, uh, you know, maybe back in 2024 we were pushing at the $12 range, but for the most part, especially since we've gotten this new administration here in the United States at the beginning of 2025, we haven't dipped it down below 14. So that's where I want to ideally place my bottom vertical spread, because I don't want to have the VIX go down below that level of 14. So we're getting signals. I'm going to bring us back up to the current. We're getting all these signals. Just like you said, you've got the light blue signal, but we're up here at $17. So, back here is the ideal place, not only at a bottom signal, but at a bottom. So that when we place our spread there at $14, we don't have to worry about any times it getting below that level. That's the confidence level. And we know that if 14 has kind of become that bottom for confidence, investors are likely not to get any more confident than that. So I'm not doing anything. That was a long way of saying I'm not doing anything on these bottom signals because these bottom signals are not coming at the bottom. We're going to wait for things to calm down, bring us back down once again to that 14 level. And then when we get the bottom signal, we place our VIX trade. Timing is important in this trade.
But theoretically, because we're shifting a little bit higher, does that mean that your premium selling concepts are a little bit more juicy because of
Oh,
the
yes.
elevated anxiety?
So a lot of our premium selling is based on something called theta decay, which means as a option approaches its expiration date, its value drops exponentially. But what's really nice is exactly what you pointed out, and that is when the VIX creeps up higher, You're absolutely right. Our volatility play, even though at expiration the premium is 0, we're now getting that much more on the volatility play because the VIX overall has been creeping up higher. And of course, it's going to be on an ETF or stock by stock basis, but we're seeing higher premiums that we're getting, which is always a good thing. They're up, anywhere from 10 to 25% what they are normally when the VIX is down at 14, 15, 16. So we'll take it.
And then are we still I mean, I imagine some of the big earnings plays are behind us, but is that something, because I know you've mentioned that you're trying to avoid it because at least this quarter, because of the volatility and just uncertainty around things, is that
Yeah.
still the case?
With this big sector rotation, with people taking their money out of techs, putting them into value plays, they're jumping on if there's a value play that gives an earnings conference call that, has any sort of hints at good news, all of a sudden all the investor money's rushing into it and it's rushing out of techs. And so there's been a lot of volatility. My favorite earnings play is capitalizes on the volatility crush that occurs. So when people get excited about earnings, they tend to buy a bunch of options to protect themselves. And then the day after earnings, they sell those options and the price of the options go up and down. And so I like to make money on that option drop in price before and after earnings. It's called a volatility crush play. And I use a calendar spread to do that. But it's also based on the idea that people buy these options ahead of earnings, and then the earnings turns out to be like a nothing burger. And so the day after, you can sell back those options because you didn't need to use them. With people moving their money around pretty drastically, I'm not just talking about retail traders. We're seeing market movers, the big market movers, dumping techs and moving into value plays. Prices are not, you can't even expect for the prices to stay the same. So unless you have a bias, which again is kind of a crapshoot, unless you have insider information, I've been staying away from my typical earnings plays.
Yeah, and it seems as if the commentary is really more important than ever because everyone wants to know, how is AI affecting your business? Hey, consumer
Yeah.
brand XYZ, are you doing AI this, AI that? Which brings me to some two of my three. I got three morning sip concepts. Maybe we can run through them, but it's been a very exciting week. I know you and I have. Well, let's just touch on the AI portion first, right? There's this video coming out of China where I guess a coupon company gave some sort of giveaway and AI like kicked in and servers crashed and tens of millions of like stores were overflowed flooded. So there's this video coming out right now of the mayhem at one of the stores when AI jammed up the whole system, right? So you got like all these and this and that. And so to me, this is like one of the negatives of AI really hitting, shit hitting the fan and things breaking because of the overload. Is this something that you could see happening in the US at some point?
I don't see why not, right? You can't. So, the scoop is that if you've got, a lot of coupons are based on loopholes, right? And whoever's got the most energy or stick to itiveness, or there's a balance that marketers have always drawn between, like, how much effort is the consumer going to put in order to get this. But now with AI, what I have found is that AI right now is a way to amplify yourself, right? To make yourself bigger. So if you didn't have the stick to itiveness to go through all the hoops in order to get the coupon, your AI, amplification does, right? And so I could see it happening. And I think marketers have to be careful now about, what they do, the number of barriers they put in place because somebody will just stick their AI on it, and especially China. China is really leaps and bounds ahead in the AI world, if you ask me. I mean, I know that we're being fed some propaganda here about our AI, but China takes things to the next level. And so if it's happening there, it's just a matter of time before it happens here.
Yeah, I don't know if you're seeing as many of the Waymos as I am, but like I'll be sitting in traffic and I'll see a Waymo pulled out and I'll just sit there and watch, be like, I wonder how the robot's gonna pull this one off, and then you hear the honking and stuff, and you're like, well, can't help you there, buddy.
Yeah.
But it's just kind of the world that we live in now. I mean, you and I were talking about it before the show. Okay, another topic that you did bring up earlier, and that was the prediction markets, right?
Mhm.
And so this weekend was the Super Bowl, which was a huge betting, gambling, predictive marketing endeavor. And so you can market on anything. So this kid right here is being called out for insider trading because he went to the stadium beforehand and recorded the length of the national anthem, right? And so this is him watch watching them do rehearsals before the event, and he clocks it on his watch, and it ends up being like a minute 44 or something, right? And then he put his Polymarket bet on that it was going to be under 117 seconds, and then he put his bet on and it ended up being 151. And so people are calling him an insider trader, but is he just kind of working the system that we've created out of this prediction market?
You know? That's if he's an insider trader, all of those folks who have done what they've done to do their research, do their due diligence, are insider traders as well, right?
Yeah.
Um, I don't see that, if you're going to, you have to realize that if you're going to be going in that predictive market, it's not just like somebody who goes and they give you the jar with the beans and they ask you to calculate how many beans or guess how many beans, and then they give you a prize at the end. you know you could either look at the jar and be like a dummy and try to guess, or you could go and do something, whether it's count the beans around the and the beans high, or you could probably also, chat is on our phones now. You could go to chat and you could say, here's the size of the beans, can you help me calculate the beans? Everybody's got their own way of doing research, and that's how we did research. So
Yeah, and then I don't know, how was your Super Bowl party?
Oh, my Super Bowl party was awesome. Um, we had it going in our little media room, our theater, and people were enjoying this. And I have to say, I nailed a Paloma. Uh, can
Ooh.
I just tell everybody, I half mezcal, half tequila, and homemade simple syrup. And I took my simple syrup and I put two habaneros and two jalapenos, and I let it boil for 15 minutes. So it was a spicy simple syrup and all other fresh grapefruit, fresh lime juice. That thing, it was a huge hit. Soda water from the Soda Stream.
Ooh.
All of my folks, we had like two or three. So however the Super Bowl ended up, everybody was happy.
Well, I don't know if you caught the streaker during the Super Bowl. I think that they did a good job of like going off camera, but everyone started posting the photos from the stadium, and this guy bet on himself to be the streaker, right? And not only that, but he wore the meta glasses and recorded the whole thing.
In first person. I
And
didn't know all that, but we did have part of our friend group, two of them who are from Washington State, decided at the last minute to get, tickets to the Super Bowl, and they totally were there. So we were getting and they're like, "Did you just see the streaker?" And we're like, "What?" With our Palomas. We're like, "What?" And so we didn't see, and I didn't follow it up in all those markets there, in all those but that's awesome.
yeah, and
So
so
he
I
was
guess
actually betting on himself in the predictive markets, is that what you're saying?
Yeah, and even more so, he recorded the whole thing, right? He
Mm.
he had a dummy that jumped out first and started to run, had to pay that guy, and then did the whole spiel, bet on himself. So I think from the math that they gave, he may have netted or yeah, like $500,000 in the endeavor.
How much was his fine?
I think it was like 30 grand.
Oh, well, he's net positive. That's the world we live in. And again, does he have insider trading or what? No, I don't think so. I think that he just did his research and figured out how he could pull it off, and then he bet on himself.
Well, this kind of was how the early stock market might have been until we put regulations and some standards in place.
Yeah.
And that was kind of the 150 years of we kind of had some rules and some ways to do it. Now with crypto and all these predictive markets, it's kind of back to the wild, wild west, it seems like.
Yeah, it's
All
called
right. Well, we'll
capitalism unfettered.
how it's capitalism AI on everyone's Mac Mini is kind of the world we're
Yeah.
in now. So,
Yeah.
we'll keep an eye on that. All right. Halfway through the show now, AJ's got some good names for you. We've
Mhm.
got his pick of the week. We've got our speed round. We appreciate everybody tuning in. We are streaming live. So if you guys have any questions, feel free to throw them in the chat. I did throw AJ's quick links link into the chat. This will give you access to all the goodies. We've got all the social media links. We've got that awesome indicator that you'll see through some of the analysis. And we've got the free daily workshop. So if you're new to premium selling, this is a great starting point. Get in on that mastermind call every Thursday by joining the Trading Trainer program. And we've got custom coaching. So if you've got a portfolio, you want to get put to work, we've got the resources and the people to help you do it. So head on over there, sign up. Got a lot of cool stuff in the works. I know AJ, spent all week developing your AI profile, right?
I did. I did. I went up to a studio that professionally helps you create an AI profile. So we'll see how that turns out as it gets released to me. It still hasn't been released. The voice has been released, but not the imagery yet. We'll see.
Amongst other very cool things that are in the works. So if you're interested in getting in on the Trading Trainer into the community, the links are there. Sign up. Someone will get in touch with you. We'll get you access. We've got some more time in the show. We're going to take a break here, a quick little 15-second break to catch our breath, and we'll be back in a jiffy. So sit tight, folks.
I get it. You're afraid of trading in the markets. Guess what? I've got your answer. I've got 4 strategies I'm going to give you along with the tools to make it super easy. I'm going right home, giving you the webinar. I need you to sign up below and meet me in a few minutes.
All right.
Hey, Sip. I figured out something last week. So remember we had that guest from Altos Trading, Jeff Altos, or Jeff. It was yes. I went back to my own trainings from back in 2011, and I realized the strategy. I reverse engineered what he was telling us, and I went back to my trainings from 2011. This is a strategy that I used to teach a lot about 15, 16 years ago, and I think I've reversed engineered it. Can I share it just for a few seconds?
Floor is
So,
yours.
so he was talking about volatility rush plays, and I keep talking about volatility crush plays that we use the calendar spread on. I think what Jeff is doing is straddles and strangles, right? So you've got this strangle that you place, and strangles have this thing called a smile curve. And if you trade that smile curve, and then there's any sort of movement up or down, and as the volatility rush happens, the smile curve goes up. I think that's exactly what Jeff's doing. I didn't get a chance to sit into his webinar. If any of you out there sat in on that webinar that he was talking about, I'd love to have you comment in the comment section, either of this webinar, not this webinar, this live show, or of if you're watching this on a replay, comment in the chats. Is that what Jeff was doing? Because I think, because I was listening to myself. I had a much cleaner voice 16 years ago. I was listening to myself explain almost the same exact thing that he was telling us last week. So if you sat into his webinar, or if you have some sort of awareness of what he's doing with those zero DTE, 0 days to expiration options, I think it's a volatility rush play, and I think he's using straddles and strangles. Let me know in the comments.
Yeah, specifically on more of the indexes, right? Individual stocks.
Yeah, you remember that. You remember
Yeah,
that.
that was something that stuck with me. So, the link, we actually got a couple videos from the episode on the YouTube and the full episode.
Cool.
So you guys can head on over there and check that out. All
Check
right.
that out.
We've got an interesting name on your watch list. My first question is, did this come up yesterday with the team, and or what are you looking at what are you liking about Macy's? Because I know ticker symbol M, it's a name that we've definitely looked through, over the legacy of the show.
So value plays, right? And Macy's is showing signs. So when I want to trade something for premium, so basically my thoughts on doing a premium trade is I'm going to trade this once, either buy or short it, or buy a substitute option, whether it be a call or a put. And I'm going to be buying this thing at least 8 months out, because I want this trade to pay for itself over that few months, right? I want to be in this one underlying symbol for that amount of time. And so what I always look for is something that starts maturing, meaning it's got more than a couple tests of support resistance. And Macy's, once it comes up here, if it tests 24, it's piquing my interest big time for a premium trade. So as I'm waiting for it to show me whether or not 24 is its line of resistance, I'm going to plan out this trade. Whether I'm going to, forward test it, meaning paper trade it a little bit to see, over the next month if it's going to be a good premium trade, or if I jump right in. That's kind of a personal decision on the confidence of the pattern. But I think that, we're at a bottom here. We're creeping our way up. We've got a little bit of a down day, as the market. Macy's is going to go a little bit opposite of the broad market, I think, because Macy's is that value play. So if all of a sudden the broad market starts seeing some money going back into those techs, like we are seeing a little bit today, you might see Macy's drop. But for the most part, we're coming off of this tested level of support at 20. We're coming up to 24. So I want to get ready. If 24 proves to be a top, I want to get ready to set up an initial position in Macy's. So in this case, if 24 is a top, I'll be wanting to short Macy's, maybe in lots of 100. Or I went over to my options lookup tool that any of you, if you sign up for the free indicators, you can still get access to the options lookup tool for a little bit longer until we decide to start, charging for it. But by putting in Macy's and clicking on the button that says viable equity substitute and going out, I actually decided to go out to the January. I found this $35 put that's trading, roughly at about $13.40, actually a little bit lower today. $13.40. That's so much cheaper than 21.83. So I can incorporate a little bit of leverage. Plus, this is a cash trade, whereas if I short the stock at the higher price, it's a margin trade. So I like dealing in cash, especially because a lot of my accounts are held up in my retirement, where the broker doesn't want you to do margin trades. They want you to do cash trades. So this $35 put not expiring until January of 2027 is kind of my target option as a good substitute. So waiting until I test that level, SIP. But if that level tests with one of my indicators, and gives me that follow-up reversal, I'm using validated end of day fast MACD signaling. We've talked about that in the past, with subsequent day follow through. If I get that signal, then I might short some Macy's or buy that substitute put. It's also a great opportunity if somebody has gone long Macy's at this lower price to sell your premium and buy your protection, right? So it doesn't matter whether you're starting out this trade at the top or starting this trade at the bottom. There's something you could do at the next reversal, and that's why I'm calling people's attention to it.
Yeah, and I feel like the risk potentially to the upside is very low because this isn't like some crazy tech name where they're going to
No.
reinvent the wheel. Macy's been operating as the same type of business for what 100 years now.
Yeah, and
Uh,
there's definitely the pressure from e-commerce, right? Macy's has had to close quite a few stores, so I don't see this company going out of business, but I also don't see this some company doing any more than being a sink for when people are worried about their investment dollar in something more speculative.
All right, that's AJ's pick of the week. Macy's, ticker symbol M. We've got about 13 minutes left in the show. We've got 3 names in the speed round from our lovely folks all around the country and the world. So let's go ahead and get AJ's breakdown on some of these names. We're going to start off with Amy out of Denver, Colorado, who's interested in a popular name on the show, Bath and Body Works, ticker symbol BBWI. Assuming might be similar play to what you got with Macy's there.
Well, I don't know if you guys remember, but all last year, Bath and Body Work was the trade that was like a good portion of my portfolio was in there, and I was making monthly income. And then it crashed a little bit starting in October. So let's take a look at it now. Thanks, Amy, for bringing that up. All right, so we crashed. We had an earnings call back in November 20th, where we really had a falling window, but we've creeped up. And then it looks like we hit kind of a level of resistance around $23.50. We pulled back to $20.50, so about a $3 drop. Now we're testing it again. I think exactly like Sip said, and the signals look really clean. So I got myself an end of day signal, could get in. Got myself an end of day signal, could get in. The channel's a little bit tight. If you've got some way, whether it's patterns or bar patterns or even a faster indicator than even the fast MACD, where you could figure out how to get in a day early, that would be helpful. But yeah, I think it's the same thing that I saw with Macy's. If we test this level at 23.50 and it actually is a reversal, I would do the same thing I'm doing with Macy's. I would, look to be shorting some Bath and Body Works. Or should we look for a substitute option with our little tool, see how fast it goes? I'm just going to type in BBWI. We want to go out at least 8 months, and it doesn't hurt to go out further. So just jumping all the way to the January 2027, looking on the put side, look at all these ones being identified in green. This $37.50 or this $40 put, instead of shorting for $22.86, we could short for $15.30 or $17.60. Either one of those, maybe the $40 if you like round numbers, $37.50 seems to qualify too. So yeah, I think you could do the same thing, but the key is the same thing I'm doing for Macy's. Make sure you have your signal for a top being found, and it's in that range of say $23 to $24.
2 in a row in the 20 range. So that's a good, not too hefty of a price tag on those stocks. So thank you for that, Amy. Moving on to our second name, Carrie out of Columbus, Ohio is interested in probably a popular brand this week, Victoria's Secret, ticker symbol VSCO. They're really riding that Valentine's Day wave.
Happy Valentine's Day. Okay. Okay. Well, when was earnings? Earnings was December 5th. So January 5th, February 5th, March 5th. Here's what I'm seeing. I don't know if you guys are seeing the same thing, and sometimes you have to zoom out in order to see it, but I'm seeing consolidation. I'm seeing where it's basically flattened off, and then we're getting tighter and tighter. So you know what? I wouldn't want it to go all the way to earnings, and it's not the exact same thing that Jeff was talking about, because he was talking about doing kind of a day trade on a 1 day or 0 day to expiration. If you look at let's see if this thing has weekly options. Again, jumping to our tool, our options lookup tool can give you much information. So let's type in the ticker symbol VSCO, and then let's switch it so that it shows not just monthly but all. Let's see if there are some weekly options. No, but there is February 20th options. There's some March 20th options. What I'm thinking is that volatility rush trade. So as this thing, and you can take a look at the implied volatility numbers on some of these things. But as this thing consolidates, what you'll see is the volatility go up. So you could consider using a straddle or strangle, and what you'll notice is that the smile curve goes up. So if you buy it down here and then the smile gets bigger and bigger, the price goes up. And if there's any movement up or down, you'll also have it go up the points of the smile. So this might be a volatility rush play. You almost want to get out of that before the actual earnings event. So keep that in mind. But yeah, this is like a pending breakout. I wouldn't want to sell premium on this, because premium is based on a concept called range-bound trading strategies. And if something breaks out, it's not range bound. So you don't want to use a premium selling strategy. Remember, trading is just matching the pattern that you identify with the tool, pattern recognition and then pattern utilization. But if you take the wrong tool and apply it to the wrong pattern, you could have a stripped nut. It's like when you take the wrong wrench and use it on the wrong nut, you strip the nut, right? So make sure you're really paying attention to the pattern. Don't just trade any strategy willy-nilly on the wrong pattern. It could end in bad ideas.
Yeah, I'm still always very impressed with their retail space. I don't know if the last time you've been by a mall, but they do their retail shopping experience spot on, branded well. And I was actually in a store recently, and it was funny because I'm like, oh, what am I gonna do? Libby Walker, oh, hey fella, hey there guy, how you doing over there? Oh, you don't know what to do either? Oh, hey.
I always ask people to model for me, so that's why. Well, let me predicate that. I don't want to seem creepy and disgusting. I hate malls. I hate leaving the compound. I rather just hang out here. I don't even like. Anyway, that's people have asked me, why haven't I done a live event in 15 years? Because I don't like to leave my house. So, but my wife loves shopping. So yeah, she takes me to the mall. So I'm usually with the little one. We go over to Jamba Juice, get a smoothie together. But ultimately, we wind up so in order to let my wife know how much I don't like the mall, I do something awkward and almost embarrassing. So I start asking women to model the lingerie. And then my wife knows. Yeah. I'm like, hey, could you model this for me? And my wife's like, I got to get him home. He's not allowed to go out. So
there was a clip that like one of the stores set up when the football games were still going on. They set up a little TV where the guys could just hang out and watch football.
Smart.
It was pretty like, it caught some heads. So that was cool to see. All right. Last and final name, Tom out of Saskatoon, Saskatchewan, wants to know, is there a play in Comstock Resources, ticker symbol CRK? I'm going to have to look this one up. I don't really remember.
Yeah, I'm going to use our little, again, you guys, this tool is awesome. CRK, right? And then you click this little button right here, and you come an independent energy company engaging in the acquisition, exploration, development, and production of natural gas and oil properties of the United States. So, and it's in North Louisiana, East Texas. The company incorporated in 1919. Okay, so it's an energy play.
G company, 1919. That was like when they first invented oil.
Yeah, right. Yeah. Okay, so it's in a nice pattern, 21 to 24. Although after their earnings call, which was after the market close on Wednesday, they kind of got kicked in the teeth a little bit. However, it looks like they're already finding a pattern. So this bar here, if we wind up closing today above yesterday's close was $19.18. We're at $19.02. This would be considered a key reversal up bar pattern, which is often a hint at a bottom. I usually like it to be validated with some sort of lagging indicator like our fast MACD or a shaken oscillator or something like that. But that's a signal that you have found a bottom. This is outside of our range. So if you take a look at this channel from 21 to 24, you'll notice that when I draw my channel lines, I have my drawing tool calibrated to also draw some lines outside of the channel. And that's kind of a probabilities bell curve, right? If you can remember back to your statistics class, if you ever took one. And this is like how likely is the candidate to reverse when it gets this far out of the channel, and not only reverse, but go back in and start crossing the channel again. Because remember, premium strategies are usually range bound. We want them to stay in a certain range. So the likelihood after getting that drop this far outside of the channel that we may revert back is pretty low. Although we did revert out of the channel because of an earnings event, not just because of organic movement. So that's another factor. But what I would want to see, honestly, is for this to give me a clear reversal up and for me to get back in there into this range, even above just this $19, and my arrow's covering it, but $19.80 something cents, 85 cents. Not only would I want to get above that, but I'd also want all of my indicators to show that a bottom has been found. And then, yeah, maybe I would consider buying this stock. I already typed in it into our options lookup tool. Let's see if there is a substitute call option I might be interested in. Again, you want to go out pretty far. I'm just by default looking at the January. I don't, oh gosh. I'm definitely seeing some options that would be trading at parity, but at the same time, I'm seeing, actually, this one's not so bad. This $7, 1060 to 13. No. Yeah, maybe this $7 call. Let me see if there's something in November. That's not bad either. The $8 call that expires in November, or the $7 call that expires in January of next year. One of those might be a substitute option, or you could just buy the stock. But here's my thoughts. My thought is it may, again, because we dipped so low, it may not go all the way back up and get into this channel. It may start its own channel. So be prepared to put your collar on, sell premium, buy your protection earlier than hitting $24. So play that by ear. But you could definitely, again, legging into these positions, you can, just so long as you get some distance from when you put the initial position on to when you put the collar on, it's already better than if you just put them all on at the same time.
Okay, it's rare for us to analyze companies that have been around since 1919. I don't even know how many names would make that list. But thanks for that, Tom. This is what we would consider an OG name. That wraps up our speed round there. All right, AJ. It looks like the markets are feeling a little good here, heading into Friday, heading into the weekend. I guess Monday is we have a closed session, right?
Yeah, it's President's Day, right?
Yeah. So does that have any impact on your heading into the weekend?
Yeah, my wife wants to, Monday, President's Day is great. I don't know how it got associated with this, but President's Day is great for buying mattresses and also appliances. So my wife wants a new dishwasher, so that's probably what we're going to be doing on Monday is shopping for a new dishwasher. We don't need any more mattresses. We've got enough mattresses, but
And then
that's that. And options are expiring next
that's what
Friday,
I was going to bring up.
so
Yep.
I guess nobody needs to know about my personal purchasing stuff. Yes, options are expiring next Friday, so we're looking if there's options that are close. Then we'll want to close those positions next week rather than let them go to expiration. We're not going to be, being a jerk for just a little tick. If it's close to full price, just take the profits. If it's 97 cents on the dollar, do that and close the position so you can sleep well at night. And this is the week that we start looking out to the March expiration, if you can believe it. So we're going to start looking to where we could sell March premium. Yeah. That's what I'm doing. It's just following the process. It's just a repeatable process that we do every month.
That's right. And if anybody watching the stream joining us today wants to get involved, the easiest way to do that is to head on over to AJ's Quick Links page where you can get access to all the good stuff. Hit that follow, hit that subscribe, hit that like button. We truly do appreciate it. Otherwise, highly recommend getting this free indicator suite, watching the premium selling webinar, and joining Trading Trainer as a program in a whole. There's a variety of ways that you can become a part of the community. So head on over there. The links to that is in the chat. I know for me, this weekend is NBA All-Star Weekend, which nobody really cares about, but there's a lot of events going on where it's just like entrepreneurs and sports and stuff. So
nice.
That's
what you'll be up to?
I'm going to be talking about AI Claude bots all weekend. That's
the new thing. In fact, we didn't use the Claw that Claw bot is like really cutting edge. Like I've seen it just in the last 48 hours. People are like blowing up my social media about what they've done. But we've done a little bit with Claude. In fact, we came up with a new dashboard. We're going to have a new dashboard that I hope we can feature in the next 2 weeks for the VIX trade, SIP. So we're going to have a place for folks that are part of our program where they have a actual dashboard which tells them how close is it getting ready for the timing signals on the VIX trade, and even suggesting which strike prices for the vertical spread, for the two vertical spreads. So it's actually using our data that we store here at Trading Trainer on a day-to-day basis on the VIX in order to do some predictive analysis. So we've got this cool dashboard coming. I've seen the beta of this. And so as always, if you got access to that free indicator suite, we'll probably throw that in as well to get your input. We always put our tools out for everybody to give us beta comments. And then once the tools are solidified, well, then that's when we might say, hey, it's time for you to chip in a few dollars. But at first, if you want to be a beta tester, just get in there and sign up for the free indicators, and we'll make sure you can give us, our 2 cents and get use of the tool. Maybe you'll get a couple of wins off of it.
Yeah, we're definitely gonna have to keep an eye on that, because the ability to manufacture your own software for pretty much anything has never been this easy. And for anyone who's been a little bit afraid of technology in the past, now is a great time to be learning. I know, AJ, you are taking a class to be, a pro in these new tools and endeavors. So they're starting to merge finance and AI and tools. They're coming together. So we'd highly recommend that get in tune in your world. And then, AJ, as you're meeting with your folks, I'm sure people are coming up with ideas and this and that and new tools.
Fast is fast.
That's the benefit of being part of the community. So head on over there, sign up. Let's get you in there on that mastermind call and more. Otherwise, AJ, that's all I got for us today.
Take care, everybody.
We'll see you next week, folks.
Thank you for tuning into the AJ Brown Show. If you're interested in learning more about AJ and his investing techniques, head on over to tradingtrainer.com and create your free account today. And if you're not already a subscriber to the show, hit that subscribe button and we'll get you